Hello, everyone, and welcome to the Gibraltar Investment Group Stock Market Weekly Wrap Up. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update for January 5th, 2025. Here at Gibraltar, we use time tested indicators and methods that helps us to navigate these markets with certainty, calmness, and confidence. A Santa slump. Major averages lower as stocks struggle with higher interest rates. The Santa Claus rally turned into a Santa sell off as stocks staggered across the finish line to close out 2024 and then go off to a rocky start to kick off the new year. The major averages went into Friday with the S&P 500 and the Nasdaq on 5-day losing streaks. Keeping a lid on equities early in the week was a rise in interest rates. We use that indicator to help us to navigate the markets. When interest rates rise, usually stocks tend to fall, or the stock market tends to fall. Energy was a standout, rising 3.44% as crude oil prices continued a year-end rally a year-end rally, closing at $74 a barrel, up 10% since early December. Friday's bounce wasn't enough to erase the losses for the week. Now, for the period, the Dow Jones Industrial Average lost 260 points, settling at 42,732. The S&P 500 fell 28 points and closed at 5,942. The Nasdaq slipped 100 points, finishing at 19,622, while the Russell 2000 added 24 points and settled at 2,268. The VIX dropped 1.8, closing at 16.32, as we reiterate each broadcast that as long as the VIX is below that threshold of 20, the market tends to grind higher. Crude oil prices added 87 cents and closed at 74 cents a barrel. Gold prices lost $18 and finished at 2,651 and 10 cents an ounce. Silver prices closed at $29.68 an ounce, while Bitcoin closed the session at 98,220. Now, the outlook of the technical market conditions the market outlook, the technical conditions of the market remain mixed as back and forth trading has left different indexes lower. Underlying breadth, the heartbeat of the market remains weak. Now, let's get right into these charts and let us see where we are particularly. Now, if we go to our foregrid 1040, this is what we use to determine the long-term trend of the market. Now, as long as the long-term trend of the market is intact, we tend to stay invested. Oh, as I always say, long-term trends dominate, short-term trends fluctuate. So for the long-term trend here, we look at our weekly chart and we have a pre-programmed color-coded module that helps us to quickly see what the trend of the market is. And here we see with the S&P 500, we are in a green background. Those of you that have been with us for a while, we understand that the green background, and it has really served us well, shows us that we are in a long-term uptrend, meaning that when you see these price bars, okay, they are 1 week each in length. Each price bar represents a week, and those price bars are above our rising moving average, which is our 40-week moving average, which determines our long-term trend. Our background is green, so therefore we are still in a long-term uptrend, even though we are noticing some pullback. We call this a shallow pullback or a short-term pullback. We also see that our confirming indicator has turned negative, meaning that this is possibly a top for the S&P 500 right now, and it is now uh, uh, digressing and showing a pullback, short-term top. And when we see that our MACD turn positive again, you'll know that the uptrend is starting to gain momentum and will possibly, with a 90% chance, according to the studies that we um, have in our archive, will continue to move up. But for right now, S&P 500 is at a pause, short-term pause, long-term uptrend. We're going to move now on to our Dow Jones Industrial Average. We see the same type of price action, even though it's a little bit more volatile than the S&P 500. But each of these price points, price bars that equal 1 week, are still above a rising moving average. As long as that moving average is rising, our background will stay green, indicating that we are in a long-term uptrend. Now, we're in a short-term downtrend, as we can see, because the price bars have fallen below our 10-week moving average. However, they are still above our 40-week moving average, and our background is still green. Our program is still telling us that we are still in a long-term uptrend. We see that our confirming indicator here, the MACD, has turned negative, letting us know that that last high was a top, and it is now falling down on a weekly basis. However, it is still remaining in a uptrend because of the long-term trend line is continuing to climb. Oh my God, that rhymes. The long-term trend line is continuing to climb. So always, as I reiterate, every session that we have, long-term trends dominate, short-term trends fluctuate. So how do we interpret this? We're still in a long-term trend. We're not going to panic. We know that from time to time, the uh, stock market will digress. However, if it does not penetrate these particular thresholds that we have in place and have had in place for years, and has worked for us for years with 90% accuracy, we are going to remain bullish in the stock market for the Dow Jones Industrial. Now we have the NASDAQ composite, which is the tech heavy composite. We still have that green background. Hey, if you would like to have this set up to help you understand on a weekly basis what the trend of the market is, this is just contact us, and we will help you to set up your chart if you are into technical analysis to resemble what we have here to keep you on the right side of the market. Here you can see each price bar represents a week, and you had a couple of weeks where in 2023 that the NASDAQ looked like it was going to begin a reversal of the trend. However, the background stayed green. Along the background stayed green, you can see where the price bars bounced off of the rising moving average. That is the key. As long as the moving average is rising, we're going to stay bullish in the stock market. We had a couple of 3-week down weeks here back in July, and you see where it came to that rising moving average, and 9 times out of 10 it will bounce off of that rising moving average and continue to move up as it has reached the top and began to pull back, but it did not penetrate even our 10-week moving average, and our 40-week moving average continues to move up. So that lets me know on a long-term basis, we are still in a bull market. We don't even have the MACD signaling that this is a top. So there is still room to run in the upside for the NASDAQ heavy, uh, NASDAQ composite, which is tech heavy. And you can see the same thing on the QQQs, which shows the top 100 stocks that are in that NASDAQ composite, and it's still moving up, up, up. Did reach a top, got a shallow pullback. We're right now right at that 10-week moving average, but the 40-week moving average is still moving up. Let's move on now to the Russell 2000, which is a small cap stock index, and you can see that there is a lot more volatility because of the nature of the small cap space. They are more volatile, but we are still in a bull market in the small cap. So, what is our takeaways from this? The four major indices that we follow are still in a green background, which indicates a bull posture. So we remain in our positions that we have in this bull market right now as of this week. So let's go to see to our other charts, what we call uh, uh, our triple grid, and it's going to give us specifically the stocks that we are invested in, and let us know how they are doing. So first of all, we are invested in Energy ET, even though energy has been on the downtrend lately. We have found a gem, a jewel, a steadfast and unmovable stock in the uh, energy space that pays us a 8% dividend. As you can see on the weekly chart, boy, it has been moving up, up, up. As of last year, the low was 13.6, and right now it had a high of $20, and we are sitting at right now at 64. Wow, this is more than double, almost double the return that we have had since we bought this stock when it was at a $7 or $8 range. Next, in the AI space, which is very hot right now, we have AIO. And you can see AIO. Let's go. AIO. Let's go. Go that round. Let's keep on with the rhythm here. It has been above this rising moving average. This is our weekly moving average. Now we do have certain indicators here on the on our supportive cast that we use to let us know that it is a top right now that has been established in AIO. And what our trigger is when this begins to move to the positive, that is our signal that we will begin to invest more money into this particular stock. Next, we have is our what resembles the QQQ is the QYLD, right? And the QYLD again is moving up, 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 not at the rapid pace that we have seen others, but you can see right now it's pulling back. And we are holding our position right now. It's still above that rising moving average. And when we get the signal to move back in, we will add to our positions in the QYLD. By the way, this pays us about a 12% dividend. Next, we have DALN. Wow. DALN is a $7 stock that has really broken out and has really started to pay us not only in price appreciation, but also a 9% dividend. Now, I like to give one stock that we have here that is in our watch list, which is HTGC. HTGC is starting to break out a little bit. This is on our watch list now, and it pays a 9% dividend. It had gone to a high of $21. That is our target, and it's right now at $20. So with that said, we are out of time. So every day and every way we get better and better. Every day and every way we grow more prosperous, successful, and victorious.